First Trust Advisors Chief Economist Brian Wesbury is with us now. Brian, I'm trying to figure out reasons why the market should be up so much. And I'm thinking, how about the president's suggestion of an extra 25-cent per gallon gas tax? That is a strange connection to make, but I'm going to make it. What about you?
Okay. Well, I don't like tax. I don't like tax increases, Stuart. None of them. However, in this case, what's interesting to me is, hey, if you want more spending in a certain area, infrastructure, why don't you pay for it? And I think if voters, consumers, citizens are faced with that stark reality, maybe they don't want as much spending. So that could be good in the long run. So I could argue that way.
You'll give me that point, will you? Okay. Now, you take my point. Now, you tell me the principal reason for this 200-point rally 20 minutes from now.
Sure. I actually believe the market sold off. It was not a fundamental sell-off. It was an emotional correction, and all we're doing is heading back up. The market was undervalued when it started the correction. It was more undervalued when it finished the correction, and now we're just heading back higher. The economy is accelerating. Tax cuts are working. It's all good news.
Man, you're out on a limb there, son, but how about this one? Consumer inflation, producer price inflation have both reached the 2% level. Why has that not affected the market today?
Well, I think it has. We have higher interest rates, right? So the thing that investors have to realize is that $10 worth of profits in 5 years, let's say, those are worth less today when interest rates are higher. When interest rates are lower, those profits are worth more. So when interest rates go up, it does affect the market. It affects the valuation of the market. However, when we run our models, the 10-year Treasury has to get to 3.9%. Today it's only 2.9, but it has to go all the way up to 3.9 to make the current value of the market fair. Okay. So we still have very low interest rates relative to profits, and that's why this stock market can keep going higher. These interest rates, they're higher, but they're not market killers yet.
Clearly so, because we're going to go up about 250 points, and we're going to open well above 25,000. Brian, thank you very much indeed for joining us this morning. Always appreciate it.
All right. Thank you, Stuart.